Now, hey, sound is on. Sorry, you had to hear that, but all right, we're back on. So, all right, let's do this again. Market Prep Friday, Capital Preservation Friday, July the 28th. My name is John Hogan. Thanks for trusting me with your time, and thanks for dealing with our new software and all that stuff. So it's always a challenge when things change a little bit, and we're kind of going through some growing change right now. So this morning, the economic numbers, the PCE numbers came out, and the markets seemed to be pleased by them. The core month over month, June was 0.3 last month, was coming up 0.2 this month, and came out right on it. The core year over year, June core again 4.6 last month, 4.2 this month. 4.1 is what it actually came out. So a little bit lower. We get a little bit of mixed information from the overall PCE numbers as well. Year over year came out 0.1% lower than they were expecting. They were looking for 3.1. It came 3.0. And the month over month 0.2% came out exactly at 2.2%. Trying to kind of rush through this so we can get everybody rested and ready for the open. This is the market prep. It's so important to do your homework prior to trading. Then you trade, then you reflect at the end of the day. And we still have the Michigan sentiment due out. July is expected to rise from 64.4 in June to 72.6 this month. We'll have to see how that comes out. We've got stocks higher, pre and post PCE numbers. The Dow yesterday did break its 13-day winning streak. One thing nobody seems to be talking about is yesterday I talked about the S&Ps needing to hold and have meaningful participation above the weekly kickoff high. It did, and at noon, the FOMC met to discuss some banking regulations, whatever they said at the beginning of that meeting, and I haven't seen anybody talking about it. It hasn't been in any of the news or the wires. But that's when things changed yesterday. As soon as they started talking about regulations on some of the major banks, that's when the market turned yesterday. And we did put in somewhat of a reversal pattern in the S&Ps. It didn't change things. We're going to get to that shortly here. But I just find it interesting that as soon as they started talking, the markets just kind of fell apart. It had a whole different look to it, and it changed instantly. That's why it's so important to be flexible, to be creative, to accept information that may be contrary to what you're thinking the markets are going to do, or what you're postulating, what you're hypothesizing, what all of that changes sometimes in a heartbeat. And yesterday was one of those days. Today's earnings are mostly out already. It's usually a shorter list on Friday, and most of the important ones are petroleum based. Exxon misses on earnings per share, but beats on revenue. Chevron beats on both, and Procter & Gamble, I'm sure we all know who Procter & Gamble are. They beat on both earnings per share as well as revenues. The VIX this morning down 5%, 1366. Dollar index 101.4. The yield on the 10-year kind of creeping sideways, sort of 3.97%, sideways to higher. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Good morning, everybody. I don't really have time to go through the whole list this morning. I want to get everybody prepped and ready for the equity open, but Matthew Fulham first in the room, you win the prize. I was really enjoying some of your comments while we didn't have sound for a while there. Really appreciate it. You guys are all so funny. It was kind of unusual situation. I think you all made the best of it, and I appreciate each and every one of you. Let's take a look at the charts now. It's jumping into the E-mini S&Ps. There we go. So here we are. Yesterday, we talked about meaningful participation above weekly kickoff high. Initially in the session, we knew we had overnight longs in this market, right? So But we really spent a lot of time up here early yesterday. It wasn't until noon until things started to fall apart. What did we do yesterday? We had some pretty good volume, which is typical on down days, but we lost 700 in open interest. This could technically be called a key reversal day. The market opened a little bit higher, traded lower, and closed lower. Now that's going to be, kind of typical, especially in a market that's directional, but this market is balancing, it's ranging, and it didn't change that fact yesterday. It looked below the low end of the range that we're in and came back in. So now what are we doing? We've got new information again with the PCE. We're waiting for Michigan sentiment at 9 o'clock. And so the open interest being lower on this move to the downside yesterday tells me that this break, this key reversal pattern, if you can call it that, it didn't change the fact that we're still in an upside digestion, was hollow. It didn't bring in sellers. It just took out some longs. It just scared some longs out of the market, which honestly is healthy for a continuation move to the upside. The volume on the New York Stock Exchange was 1.5 billion. That's more volume than we've seen in quite some time, but it always makes sense when the market starts to look to the downside. Everybody wants to jump in. Here's the 30-minute chart. All right. So here's weekly kickoff high, 46.04. We knew we had a lot of overnight inventory that was very, very long yesterday. So my idea was, be patient because we're looking at an upside breakout. Be patient, look for opportunities to look for longs as the overnight inventory unravels. And that's really what happened. It went right to last week's high, the previous day's high, and it found a base there. Well, if you were long there and you got to the high of value, which at the time was pretty much right here where this market kind of topped off, if you took that trade, you were in good shape, because when we started to take out the lows and we started to fail above the weekly kickoff high, all bets for long were off. And hopefully you did not fight this downside move. Like we were talking yesterday, it's like trying to catch a knife. You don't want to do that. If you found a way to get into this downside move, great. Where did it go to? Basically the low of the area of balance that we have been in. What are we looking at this morning? Overnight inventory to the long side. Look what we did yesterday with the overnight inventory to the long side. We were unable to maintain meaningful participation above weekly kickoff high, which means that weekly kickoff high to the last week's high, this whole area here is kind of a target-rich environment again for us. So we're going to watch and see if we get some sort of overnight inventory adjustment. The thing about yesterday was there was a lot of time. There was a lot of balance up here. The market was signaling acceptance of higher pricing. Whatever changed at noon, changed that for the day. Did it change the longer time frame? No, we're still in an upside digestion. So what I'm going to do today is do what I did yesterday. I'm going to try and be patient, look for the market to come back down, take out some of these overnight longs, and see if I can find a base to look for an opportunity for a long. Why? Well, when we look at this profile, in essence, it's a double distribution trend day to the downside. We have a distribution of time and volume up here, which is, again, above that weekly kickoff high. Something changed. The market moved to the low end of the area of balance we've been in and then started to base. It tried to put in a late spike. And if you call this a late spike, you would call where we're going to open rejection of lower pricing. However, look where we are. We're right in the middle of the range from yesterday. And if we open here, there is a tendency for the market to trade to an assumed point of control down here in this lower distribution and an assumed point of control in the upper distribution, where we could see this market just digest this area for a whole nother day. Next week's a whole nother week. Okay. Take a look at the Nasdaq, which is a little bit of a different story, right? So yesterday we put in a new recent high in the S&Ps and rejected above weekly kickoff high. We didn't do that here in the Nasdaq. We are now, what is this, our fifth or sixth day in this area of balance. And I'm kind of looking at the extremes of this area of balance at 15,740 relatively close to the current extended trading hour high, and 15,522, last week's low. Open interest yesterday ended up being higher on higher volume, but we didn't change the market state at all. We added another 3,700 in open interest, but it's kind of inert. It doesn't mean that much because we're still range bound. May mean more energy when we break out of this range, but at this current spot, not really that interested in too much about that open interest. So what do we do today? Overnight inventory, again, to the long side. We're about 10 minutes to the open. I'm going to try and get done with this before we get to the open. If we have to skip a product or something, that's fine. So overnight inventory looks like we may be getting nervous already. I'm going to try and be patient and look for opportunities to buy the market if we get an inventory adjustment, because the same situation exists in the Nasdaq as it does in the S&Ps. Distribution of time and volume, opening between them, high probability of reaching one or both of the assumed points of control in these distributions of time and volume. Not much of a distribution of time and volume down here, but it's what we've got to work with. Trade what you see, be patient. We're opening in range and value. It tells me there's no real rush to get into anything here this morning. The PCE numbers didn't jar things too much. We're right in the middle of yesterday's range. Stay cool, calm, and collected. Crude oil, yesterday, we had some decent volume to the upside. We lost open interest. So how good is this auction process doing? We lost open interest. Volume was okay. I'm giving yesterday's auction to the upside basically a C. It's overlapping to higher. It closed higher than it opened. It added a little bit of volume, but lost open interest. That can be an indication of an auction that may be getting close to being exhausted in one direction. I'm still kind of focused on these swing highs right here, because this is an exact double top. These highs are exactly the same, 81.44. Now, a lot of people consider double tops resistance. Some people consider them unfinished upside auctions. This swing high could be a visual target for traders to bring price to. And if traders are focusing on a level, there's a tendency to bring price to it. TPO chart, 30-minute chart. We opened, we looked lower, we looked higher. We have a double top here. Again, not a very strong high. We closed here in the middle. I mean, when we look at this profile, it's a normal variation day, but look at the excess at the bottom. Remember, the downside auction ended and buyers took over. Those buyers did not leave excess at the top of this chart. So even though with the loss of open interest, and with a little bit of higher volume, that's good. It's indicating that the upside auction may not be finished yet, which lines up very nicely with my 81.44 double top. We don't know what's going to happen. Anything can happen. This market has now opened. It is in range and in value, suggesting we stay patient. Gold. If you are not trading gold, if you are not trading the December gold contract, I should say, then you're still trading the August, which the volume has moved into the December contract yesterday. The volume and the liquidity in that December that August contract is so thin, you probably notice it if you're still trying to trade the August contract. Move to the December contract. Now, there is a $40 premium between the August and the December contract. So you're going to have to adjust any levels that you've accumulated on your August contract by $40 to the upside. Rollover. So we lost 13,000 in open interest on this push to the downside. If this were not rollover, I would say that was a weak auction to the downside, but rollover, right? So now we've got the market kind of looking to the other direction. This move to the downside, again, I'm looking at it as hollow because we did lose open interest. It's not like there was money coming in this direction. There was money coming out of this direction. Take a look at the 30-minute chart. overnight inventory long. Look at this B-shaped profile. That is supported by the loss in open interest. So that could be a function of rollover. It could mean that some longs decided to get out. Whatever it means, we've got overnight longs. We're basically in range and value. There is a lot of toothiness in this volume profile, which can be a visual to bring price to. Just like the equities, it wouldn't surprise me if this market just kind of fell into range, digested where it's currently at, and we start over again next week. Okay. I think with 5 minutes left before the open, we should call this. I know where there's not a lot of folks that are trading the euro and the 10-year, although we like to provide as much information as possible in as neat a package as we can. So let's just take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Happy Friday, everyone. Capital Preservation Friday. No reason to take big losses today. If you've had a good week, that's a great thing. Make sure you finish the week strong. We've got a whole week next week and some really cool changes to the market prep and changing it to the opening call and fast market. We're going to be doing some live trading. We're going to have lots of visitors and lots of cool things for you to check out. So we look forward to hopefully being able to begin that on Wednesday. So Monday, Tuesday, market prep, maybe on those 2 days. But again, we're looking forward to bringing you even more information and more tradertainment, if you will. So looking forward to seeing you on Monday if we're going to be doing a prep, and have a great weekend. Anything else? No, again, thanks for your patience with our issues that we were having here this morning. Bless you. Have a great trading day. Have a wonderful weekend. Rest up. Do something kind for yourself. Do something kind for somebody else. And we'll see you on Monday. Hopefully. Trade well.